Okay, yeah, Transcorp 2025 audited results. Yeah, if you look at the headlines, you see that the group recorded profit after tax of 554 billion. It was up in percentage-wise by 44%. Then you have to know that Transcorp has three major segments: the power arm of the business, the hospitality part of the business, and finally the oil and gas. So for the power arm of the business, which contributed more than 80% of the profits, then the hospitality and they contributed close to 15%, while the oil and gas, which is still in the early stage, so cash burning and losing money. So that is the three arm of the business. So what it means first, before we dive into the books, is that if the power arm coughs, every other arm of the business catches cold. So let's look at the income statement side of things to see how it all works out and walk you down to the balance sheet. Then finally we come down to the summary so that you know the play there. So profits, first of all, if you look at the headlines, you see that profits increased by that number because of, first of all, there was a electric tariff hike, just like you saw it in, if you have followed our analysis on MTN Nigeria, you know that tariff on data and stuff like that increased. The same thing applicable to electricity. So people are paying more for electricity in 2025 compared to what they paid for in 2024. So let's look at the income statement side of things. So if you look at the income statement, this is what you're gonna see. You see that the revenue went up over 33.4%. Gross profits, operating profits, everything is looking up, which is pretty nice. Then if you overlay the revenue, you see that the revenue, so the upline is looking pretty nice, but there is something you have to pay close attention to here, and that thing is the admin expenses. The expenses are also increasing, and the impairment. So that is something that is natural, but it is something that you also have to be watchful of. So then if you look at the pack, so net, you see that the gross side of things went up, the operating profit went, and the net profit went up too. But something happened here, and that thing is this. If you look at the margins, imagine a margin of 50.46% on the gross side of things. Operating margin, same thing, increased. But if you look at the operating margin, if you compare it with last year, operating margin dropped because 2024 operating margin was at 36.48, but this time around it was the same 36, but it is at 36.24. So what happened is, this is where cost comes in. So the cost of running the business was pretty higher in 2025 compared to 2024. The cost in percentage wise. So that is what affected that side of the business. So let's look at the balance sheet. So if you look at the balance sheet, before we now go to the summary and stuff like that. Okay, it is loading up. Yay. Okay, this is the balance sheet. So if you look at the balance sheet, you see that the total assets side of things also went up. Assets went up, equity went up, but liability dropped. So for the asset side of the business, so the total asset now is over 1 trillion. Now that is the book value of the business now is over 1 trillion. But there is something to watch out for in this asset side of things, and that is the trade receivables. When you look at the trade receivables, you see that it ballooned from 320 billion to 542 billion. Why? Because of the debt. So if you look into Nigerian power sector, you see that they are being owned massively. So that debt is hitting the business. So that is the biggest risk. The next thing here is, if you look at the payables, they deferred some tax too. So let's not give you some key things you have to know. So the first thing first is that the business is generating a free cash flow of close to 35 billion. If you strip out the trade receivables, which is the weakest leg coming from the power side of the business could have been generating close to 45 billion free cash flow. Then the increase you saw in revenue is not really operational, it's just a tariff hike. Then the hospitality side of the business is doing pretty nice, especially their big hotel, Transcorp Hotel in Abuja. Then the energy side of the business is still burning cash. The oil and gas side of the business is still burning cash. Then one thing to watch out for is for their power plants, the guys that supply them gas has something in common with the chairman, which is Tony Elumelu, and their supply is coming from Hess Holdings, Hess Energy, which is a branch of Hess Holding, is supplying them gas. So immediately they started supplying them. I remember they have similar chairman. Their supply moved from 8 billion in 2024 to 30 billion in 2025. Is it bad? No. If they are getting a good pricing, that is good. But it means there is something they have in common, the same chairman. And another thing to look at for is that they deferred some tax. So they have some tax payable that is now sitting around 92 billion. So the risk to that is that when the NRC, that's the Nigeria Revenue, this comes for their money, if they are aggressive so much, it is gonna hit the cash in the business. Then the next thing to look out for is that their assets in Ikoyi was revalued, and that asset is now sitting at 10 billion. And finally, due to those receivables you are seeing, a provision ought to be made for them, and those provisions are called expected credit loss. It is now sitting close to 12 billion. So that is the concern we are having here. And finally, remember when they bought into UBA rights issue, also UBA, Health Holding, Transcorp have one thing in common, and that is the chairman, Tony Elumelu. So that is just the concentration risk we are having there. There's nothing bad doing business with somebody you know, but that is something we have to look at for. So let's go and look at the summary of the playbook before we call it a day. So the summary is this. Remember, you can get all these graphics on our X page, which is apest_invest. So if you go to the final playbook here, you read up more on the analysis. Number one, the investment case for this business rests on Nigerian power tariff reform. So currently the sitting governments, they are trying to pay the legacy loan being owed to this GenCo, that's the generating company. So if those things start coming, if there is consistent repayment, then it is good. Then their hospitality demand is also doing pretty nice. So this is what you have to watch. You have to watch, since the power side of the business makes up more than 80% of the conglomerate's money. So that is it about Transcorp. Follow up our other analysis. We are going to analyze their 2026 Q1 result is already out. So watch out for that. Follow us on X, like, share, comment, and subscribe. See you on the next one.